Raghav Jindal, Managing Director at Jindal Drilling, is joining us to talk about business outlook. And there is a lot which is going on. Just look at that chart on your screen. The stock has doubled in the last 6 months alone. Raghav, good afternoon. Thank you very much for joining us. We are gathering that, the rates for your drilling drilling services are on an uptrend, and new contracts that you're actually getting is at much higher levels than the previous ones. Can you talk to us about which way are the rates moving? And for the full year, what kind of improved realization will you clock because of that?
Hi, good afternoon. So, the drilling segment is doing pretty well worldwide and in India. If we see the Indian demand, ONGC had 27 rigs in contract, and it's expecting to increase it to 36 rigs with the current contracted under contract. So the domestic demand has increased by almost 33%. However, the supply of rigs are in short. Internationally, there are no rigs which are available, and so this is leading up to good higher prices that we can demand. And over the next 1 year, this would help us substantially, since all our rigs are 100% utilized. We have one rig which is under refurbishment and should go under contract end of this month. And also we have one rig which is already tendered out. So we should hear about it very soon, and that will be in contract by early next year or mid next year.
Jindal, so that's a win-win situation coming in. There's a short supply, pricing is quite attractive, utilization is above 100% as you talked about. So given all of this, is it fair to say that the margins will stay above 30% mark? And secondly, to increase your own supply in terms of the capacity, what are you doing to, perhaps put in more capex and get some more rigs, etc.?
We're definitely in lookout for more rigs since there is another tender floated by ONGC. We are talking to a few parties to either buy the rigs or do a bareboat charter with them. So we are in talks there, and we hope to add another rig to the fleet for that tender.
What will be the cost of acquisition, if you can tell us that? In terms of funding, is it already in place? Would you be looking at getting more debt for it? Could you walk us through of how the dynamics work out?
So basically, if we are looking at a second-hand rig, it could be anywhere between 40 million to 120 million, depending on the condition of the rig and how the rig is placed. We're looking at some rigs which are new builds also, which could be a little bit more expensive. So it really depends upon what rig we finalize and what we eventually find. Once we have that in place, we will look into the financing.
Raghav, so you're saying that the cycle is actually favoring the company right now on the rates front. How prolonged do you see it happen?
Internationally, also the rates have crossed 100,000 figure. In India, we are still around in the 80s. So we are definitely, there's a big boom.
What are we talking about here? How are the year-ending exit rate looking? You ended the year 23 with 500 crore kind of a number on a top line, about 100 on the bottom line. Do you see that up move carry on at the same rate, or what's the internal looking like? The internal
definitely, like in the coming this current year, we had 3 of our rigs under refurbishment, so that was an ideal period. In the coming year, 24-25, we're definitely looking at increasing the margins substantially.
What does substantially mean? If I can probe further, what does substantially mean?
I would say more than 50%.
So you're right now at 30%, you are taking it to 50%, or 30% will get improved by 50%?
I'm talking more on terms of the revenues.
Okay, rates.
Yeah, and PAT.
Okay, 50% higher PAT for 24. And how does the 25 picture looking like, or is it too early to kind of extrapolate that far?
So these rigs are all contracted for 3 years minimum. So we can envisage that as well. We have only one rig which is coming off contract, which is in September. So that will be in So the Jindal Supreme, which is in Jan 24, is already been contracted. May 25 is one rig which needs to be contracted in the year 2025. So we have a clear picture for then. And if we add another rig in our fleet and if we're operating that, obviously the revenues and margins gets added on for that.
Are you saying that a ballpark, are we talking about, say, 100 crore profitability, which ended at 23 March? You have a 3 to 4 year, 50% earnings CAGR visibility now.
Correct.
Excellent. So 100 crore can grow at 50% for the next 4 years is what he's indicating at. No wonder the street is so excited about your stock. So no preference issues, no fundraising, any corporate action kind of lined up? People must be approaching you for picking up stakes, are they?
No, we are not really.
That's important because that's the message that whatever action you want to participate in, the stock market is a place to be active.
The open market purchase is the
Correct.
only option to kind of participate in that 50% CAGR that the management is guiding. Thank you so much, Mr. Jindal, for making time and speaking with ET Now.